A lot of traders think that you need to avoid the markets altogether when there is ongoing conflict. That isn't the case. These are my results over the last month and a little while. And today I'm going to be speaking on how you can capitalize on the markets and fine tune your strategy to actually be ready for the opportunity when it counts. Now, of course, you need to be wary of the macroeconomic aspect and when fundamentals are dropping. So if news is happening, it could spike the markets and you need to be wary for that. But if your setup and your strategy is in tune with what the market is doing and you know the overall trend, you should be thinking about positioning yourself. One of the things to avoid is definitely holding trades over the weekend during times like this. Now, a lot of people haven't understood this yet, but I've started to realize that there's a common theme when there's ongoing tensions. If you think about when news drops, it normally happens on a Saturday when the markets are closed. And there's a reason for that. Think about who is actually able to trade the markets over the weekend and who is actually susceptible to bearing the brunt of whatever happens as the market reopens. Now, some traders who held trades over the weekend could have been risking their account being blown to shreds. Some, however, could have been waking up in massive profit. However, I would not recommend ideally holding trades over the weekend because of the temperamental nature of what geopolitics brings. The common thing to understand is when the markets are uncertain, you do not know what the next step is. It doesn't matter if technically it's showing you the trend is one way, you can significantly start to see gaps go the opposite way, and realistically you are at risk of that if you don't know how to trade during those times. The reason the news is put out at certain times is to put you into assumption mode, and that can actually lead to emotionally trading instead of logically trading. Now, when you are trading outside of your strategy's parameters, you are in no man's land and susceptible to making bad decisions. A lot of traders would have had areas that they marked up for the week ahead that have been invalidated due to what's happened over the weekend. Do they now get emotional and start reacting to the market, or do they remain calm and start to look for other areas that they may be interested in as the week develops? The choice for you to engage in the markets is at your fingertips. You do not need to push buttons just because the market is moving. What you do need to do is follow your trading plan regardless and make sure you understand why you are trying to enter the market. Some traders would trade the market gap saying to themselves that it will be filled straight away, and sometimes this is not the case. So when there is geopolitical tension, do not give in to that and realize that anything can happen in the uncertain time. So let me show you some of the trades that I took and how I was able to profit regardless of the ongoing geopolitical tensions, and how you can actually use the fundamentals in your favor. Alright guys, so coming onto the charts now, what we have to understand is if we can get a good read of what is happening in the news, we know what way the markets are likely to drive based off of that, okay? So for those that don't know, those that are looking at crude oil, those that look at oil to trade and stuff like that, Iran is a big deal when it comes to oil, for the simple fact they have the second largest reserve in the world of oil, for those that didn't know. So if there is a threat against that economy, what is the likelihood of oil going up? There's a very big likelihood. So what we're able to do is see off of the 13th, in regards to June, right, we saw that there was potential airstrikes happening, and not even potential airstrikes, we saw that there was airstrikes happening, and obviously that is going to be a catalyst to drive the price up, okay? So majority of this may have caught people off guard in regards to, okay, this is what's happened. So bear in mind though that the macroeconomic aspect, okay, now that there is a potential uncertainty in that region, we know that oil is likely to head higher. Now, does that mean that we're just going to press buy? Of course not. You're still going to have to do the technical analysis aspect, but still have your understanding that, okay, we are likely to push higher. So yes, the market sold down off the back of that news, but realistically you should have just been looking at it as areas for the market to then go on to target, okay? So same thing could be said for those that are, you know, trading the dollar pairs, right? Those that look at DXY, if you think about what the DXY actually is, it's the global reserve currency. So if we think about the global reserve currency for what it is, right, and we understand that if there is a issue going on in the world, the dollar is likely to rise, right? Now, the main reason it's going to rise is because people are going to flock towards that currency. not as a safe haven, because currencies are not looked at as safe havens, but it's the world reserve currency. So that is likely to push the market higher. So anything in regards to the dollar, anything in regards to commodities, you got to think about what is likely to happen. Gold is likely to go up. The dollars, the currencies against the dollar, the major pairs, they're likely to come down. So if you have this in mind from your technical analysis perspective, you can start to trade in those directions, right? Because now, it doesn't mean, again, you don't have to do analysis, you don't have to find your areas to actually get into the trade, but the macroeconomic outlook should give you the inkling or the understanding of what is the likely direction for the market to go in, right? So that's half the job done if you understand the macroeconomic. So from doing that, guys, right, you're able to then get setups which are going to flow in your favor rather than, you know, pushing against the market or trading a consolidation, or when the market is ranging where it's uncertain. If you have a direction based off of the dollar going higher and you know it's going to go higher, you can position yourself for GBP USD, you can position yourself for Euro USD, AUD USD, anything with the dollar, right? You know what the likelihood is. So you should be looking for setups with that in mind, to actually have not only the technical analysis aspect, you also have a fundamental aspect as well, which is just as important. So where you're able to do that, right, you should be able to then trade through those times where people will be like, oh, I'm staying away, or it's uncertain right now, I can't get a good read. All it means is that there's likely to be more volume induced into the markets, right? Which is a good thing. We need volume in order to profit. But still, there may be times where the market doesn't give you what you need from an entry perspective, but at the same time, you're still going to be able to capitalize, knowing if you have a direction, knowing if you have a bias in terms of what you actually want to see the market do. Now, overall, since the market rising, the oil market rising, right, realistically, it's pushed up and then it's kind of gone sideways. It hasn't really made higher, well, it has made higher highs, but in regards to the actual direction, we're not getting that same volume that we was once getting. So we have to understand that and obviously prepare for potential retracements. But again, overall, you understand the macroeconomic and the uncertainty that is continuing. If the uncertainty is resolved, then you can then change your bias. But overall, you should expect higher prices on something like US oil. So the structure is even showing you that there's nothing to suggest that it's going to turn around at any point. So when it comes to analysis, right, pairing what is happening within the world and understanding global economy, you can actually set yourself up to get ready for trades that are going to benefit in your favor, right? So oil is likely to go higher, gold is likely to go higher, currencies, the dollar is likely to go higher, meaning majors are likely to come down. Indices are likely to come down. The stock market doesn't do well if there's uncertainty in the world. So go and back test that. Go and understand, okay, cool. When this was announced, what was the markets reacting like? What was the stock market doing? What was the commodity market doing? You'll start to see a correlation without actually having to think too hard about technical analysis. You'll start to see a correlation just on that alone. Now, obviously, I'm not saying you should be thinking about when these news events are going to happen, because sometimes they're not planned. So like when we got the announcement that there was strikes happening in Iran over the weekend, it wasn't a planned announcement. It was just, this is what we did. So when you understand that, you have to then anticipate coming into Monday or coming into when the market opened, the market's going to respond to that, okay, which is really, really important to know. Now, another thing I want you guys to consider as well is understanding, right, that realistically, before any of that announcement even happened, you can still understand what the trend is actually doing anyway. So if you're able to position yourself based off of the technical analysis and what your bias should be, realize that the news is just going to be the driver to actually maneuver price in your favor overall anyway. So that's why it is important to really have a read on what you see the technical analysis being, whether it be bullish or bearish, and just understanding that where you're positioning yourself, as long as it makes sense, the news is just going to be the driver to go in your favor. So you may have had outstanding areas you was interested in regards to equal highs. So with it being an outstanding area, right, you can then go into the market saying, okay, cool, I actually think the technicals are showing me a willingness to want to go higher, whatever your reasons may be. Some people trade, you know, SMC concepts, some people trade support and resistance, supply and demand, whatever it is, right?
the macroeconomic is just going to be a push in your direction if you understand what the likelihood is in regards to the trend and, you know, what is actually happening in the world and how it's going to have an effect, right? So realistically, you're able to actually get involved in these markets and potentially hold them longer in terms of being in the right direction with what's to come, with all the uncertainty brewing, waiting for these announcements, and then you can actually capitalize without having to reposition yourself or add more positions as the news breaks. So all of this price action is showing us that everything that we could have potentially done from a positional perspective happened before the events which have now unfolded, right? So here where we are on the higher time frames, we can understand that just within a 2-week period, right, what that could have done for us, okay, which is really, really important to understand. Now, has the uncertainty been quashed? No. So there's still the aspect of and the element of it wanting to then go higher. So now you're looking at other areas of it wanting to do that and so forth, right? So a lot of people don't really rely on fundamentals, and you know, they don't really look at economic calendars. Realistically, you should be, because they're just the drivers to kind of get price in your favor.
So this video was just to give you guys an insight as to how you can actually use fundamentals and the macroeconomics to position yourself in regards to the potential of the market moving in your favor in the weeks to come. You don't need to be scared of these things. Yes, you need to be cautious, but it's only cautious if you don't understand what direction the markets are likely to move in, okay? So if you've got commodities are likely to go higher when there's uncertainty, especially in somewhere like Iran, because they have the second largest oil reserve. What impact is that going to have if they are no longer part of that supply chain temporarily? The price of oil is likely to rise. Stock market is likely to go down because global businesses and global economies are not going to actually like the uncertainty, and it's not going to be good for shareholders who are wanting to invest. They're not really going to do that. The gold prices are likely to go up because it is a safe haven. The dollar is likely to go up because it's the global reserve currency. So all of these things that you can factor in, realistically, you understand how you're able to play the charts based off of that information alone. And I guarantee you it will make your results and your process to actually get in trades way smoother. So go and back test this, guys. Don't just listen to what I'm saying. I want you guys to look at your pairs and see, leading up to these actual weeks that have passed, as these events have unfolded, how you could potentially have positioned yourself. And if so, how you would have actually managed the trades as and when. You would have seen that you would have been able to hold them for a longer amount of time and understood that, okay, the markets are going to be driven in this direction based off of the macroeconomic. So if you found this information useful, guys, hit the like button and make sure you subscribe. And if you're interested in joining my free community, the link is in the description. Now, all you have to do is make a profile. I'm not asking you for any payment or nothing like that. Come and understand day to day what it is you can be capitalizing on when the markets are like this. I'll see you guys on the other side.